Okay, so kindly again confirm if you can see my screen as well. Okay, thank you. Okay, so NZD USD I sent analysis the channel. So let me just break it down all the way from monthly to my video. My entry. Okay, so starting from the monthly time frame, um, if you observe, um, this was the last order block. Okay, my bad. Okay, so yeah, as you can see right there, this whole area was the order block, and this was the last supply zone. This green region, this was the last supply zone, which was in control because as you can see right there, the price was pushing downside, and this was the last supply which wasn't mitigated by the price when it was right there. Okay, so price came up there, gave a reaction, but eventually it broke. Okay, so that was the last demand zone which was in control. Okay, but what price did, price came down and again flipped that. So that shows that this change of character right there. Just a second. क्या चीज़? ये 15 मिनट तक देता हूँ. 15 मिनट तक देता हूँ. 15 मिनट तक देता हूँ मैं आपको. 15 मिनट तक देता हूँ ना. Okay, sorry for that. Okay, so I was explaining that this was the last demand in control. Price came there, but again flipped that. So that shows actually that this change of factor right there, which price broke above that, people would be considering this as uh, you know a structure break, a change of character, and they would be looking to buy from this region. But eventually, for me, that was purely a fake structure break just to induce the buyers in the market. And how did I actually came to that point is because when price was coming back inside this, this last order block right there, okay, price wasn't really, kind of giving in the buyers, like, showing the buyers intentions with that. Yes, it was getting rejected, it rejected right there, but again, price, filled this break right there. So same thing right there, price again rejected to that area, get that candle right there, rejected to that, but again, I was observing that, this wick right there took out this high, and we are seeing some, bearish intentions within the candle. Okay, so there was nothing much rather than that on monthly, but let me just go down on the weekly, and we shall see something good. So okay, on weekly time frame, as you can see, the break of structures, market, the break of structure. As you can see right there, this was price was pushing downside. It again did a fake structure break to the upside, and that again was what to induce early buyers in the market. Okay, a nice bearish momentum, and price again was breaking structures to downside. So obviously, if the trend is to the downside, if price is breaking structures to the downside, then there is no reason for price to go upside. Obviously, there might be reason, but there is no reason for us to enter for the buy trades unless we get any other confluences in the market. Okay. So right here, another thing which I was observing was these candles right there. Okay, this candle, this candle right there, this mitigated this last supply, and I was seeing a huge entry in candles. In candles anatomy, we call that as engulfing candle. So price engulfed this huge bullish candle, and it was a good reaction from this last order block which was in control. Okay, so as structures downside, we saw a nice bearish entries in the market, bearish intentions, this engulfing candle in the market. These all things shows that the price might be continuing to the downside. Okay, so similarly moving down on the daily time frame. Okay, so right here you can see. that um, this was a liquidity grab right there. Okay, this little wick right there, this little wick grabbed this liquidity and it broke structure to the downside. So this could be considered as the inducement. Price came up and mitigated the last bullish leg before that bearish wave which emerged in the market. Okay, so this order block got mitigated by this wick. Okay, and it again flipped all the demand zones in the market, and just seeing this bearish momentum again in the market, it just showed that price really wants to go downside. Another thing, as you can see these lows right there, okay, you may observe that I really trade based on these as well. Like if price does a liquidity grab, I consider that the price should have a good momentum in the market. But this was a, I mean this these were there were liquidity below these lows. So if price went broke to the downside and if it closed immediately in the market range again, then I would have considered that as a valid liquidity grab. But what happened? Price my closed below these lows right there, but I was not seeing any good bullish entries in the market. So that clearly showed that the price might continue to the downside. And then again thing which you might see right there is this was the last bullish leg before this bearish leg, a broke structure. So this whole bullish leg is an order block according to ICD. Okay, so as you can see, when price broke to the downside, this was the low of the order block, and if you see, price mitigated that low as well. Okay, so that shows, and that is more like a V-shaped recovery, and maybe that's some sort of phantom concept. I don't know, but from a personal observation, when price does something like that, it's kind of not normal for price to go all the way upside, because just seeing the momentum, it just shows the price might continue to the downside and eventually take out this weak low right there. Okay, so moving down to the 4 hour, which was um, there was nothing on that. Instead of 4 hour, I was looking at 2 hour, and that is the time frame where I sent my entry. Okay, you can clearly see that how a distribution, a redistribution Wyckoff schematic occur right there. Okay, let me just a second. Okay, right there. So this was the wave. This just a second. Okay, so price took out this high, broke structure, and a nice bearish wave emerged in the market. So this is the last order block right there. Okay, and as you can see, the price mitigated that order block. Let me just short that right there. As you can see, price mitigated that order block right there. Okay. Okay. Next thing, when price mitigated that and it broke structure to the downside again, I was considering this as the Wyckoff redistribution schematic. Okay, and most of the phases were already completed, and the last phase from where it's these three UTAD, test, and LPSY. These are the three phases where I personally look to enter. Sometimes in the UTAD, sometimes in the test, sometimes in the last point of supply. It depends. Okay, so test occurred, UTAD occurred, and the last phase was where I should be entering was the LPSY. Okay, so that price was kind of right there, and I was considering price to go upside and mitigate this last order block. As you can see, if I had marked this, people would be marking this. Some people would be marking maybe this. Okay, as the order block, some would be marking maybe this hidden order block right there, but I marked this one because um, most of the times why people miss the entries is because they're too precise with the market. Like they want the market to tap in their specific zone. But while it's not really the case, you have to be flexible with the market. And this whole region, I know this whole region is really too great. That is a huge area for me to consider an order block. Let me just draw that. Like that is really a huge zone for me to directly enter the market, being the reason I always wait for price to show any uh, fractal distribution on lower time frame, and that is exactly why I mentioned right here that I would preferring fractal distribution right here, and I will be going over the entry in just a second. So other thing, like price broke structure, there was a huge momentum. Previously, the volume was kind of decreasing when price was, uh, struggling right there, consolidating. But when it broke to the downside, that volume was kind of, that was an increase of volume. This was right in this candle, okay? So that showed that the price, according to the volume concept, might be pushing to the downside, okay? So these are a few confluences which I was eyeing on NZD USD on 2-hour time frame. So let me just go over my entry time frame and I'll show you my entry. Okay, right there. So previously, if you have attended my other videos, I mentioned that it's not necessary that the Wyckoff schematics might be like this. Sometimes it could be like that. Sometimes it could be like that. It depends. Okay, you have to be flexible, and that is something you can only get to know when you are trading. Okay, when you are taking out your time and spending with the charts, then that is the only way you would be considering the market to, the view the market like that. Okay, so I was considering this as the distribution phase again, and when price broke above that, these were the, let me just zoom in a bit. Okay, okay, so when price took out this high right there and again closed within the range below. This was a nice bullish entry within this candle, okay? Because my entry was as soon as this candle closed. So this candle itself had, a good bearish entry. It took out the highest, according to ICT, that is more like a turtle soup pattern. So price took out these highs, closed below, mitigated this order block. Okay, this price was still respecting this order block because this order block took out the previous highs, broke structure, left an imbalance, inducement, price went up, took out the high, and again closed with, strong bearish momentum. So that is the point where I entered and I place my stop loss above this unit, because if price invalidates that, then that is just more like a fail of that Wyckoff distribution. So there are something that I do, and let me just explain that as well. And that is, like, sometimes, as you can see, like we analyze all the way from monthly to the 5 minute. So we can swing our trade as well. And by swinging, what I mean is that we can make our stop loss above this high right there and target all the way downside. While we can also do an intraday setup while placing the our stop loss above this trade. Okay, I personally go with 1/4. So if I had placed above that, uh, I guess my four, yeah, it would have been hit. And again, I placed right there and I targeted this demand region right there, and it again got hit as well. So that is something which I personally honestly can't explain you, like when to place stop loss here, when to place stop loss here. It just is something that when you are trading, you would get it over time. It's not something which I can explain, but like just seeing the price unfolding, I just get to a point, get to a decision that whether I should be placing a stop loss here or whether I should be placing a stop loss here. So that is exactly what, when price was doing something like that. So I believe that, I should be placing my stop loss here right there. So we analyze monthly, weekly, daily, 2 hour and 5 minute. Like this is how I do my top term analysis, like starting all the way from monthly and getting on the 5 minute just to get this trade. And why is it so? Because if we have some multi-time frame confluences, like we are going with the high time frame direction, we are going with the middle time frame direction, we are going with the into time frame direction, then the confluences, the probability of a setup increases to a higher amount. Okay, and that is exactly what I like to do. Like I always analyze all the way from monthly and to, all the way to 1 hour or 2 hour, and my entries are somewhat, based on 15, 5, 30, 1 minute. It depends on these low time frames, and these are my high time frames just to get the the major directional bias or some sort of that. So that's all actually for this pair. Like that is exactly what I was seeing, and I just illustrated that. So if you have any question regarding this setup, you can unmute yourself and ask that, or you can just type that in the text box. Any question, you can unmute yourself and ask, or you can just write down in the text box if you are shy. Okay, so um, I think it's clear. Then if there is no question there. What's the NU target? Actually, my trade has been already hit. Like I was targeting this region. Like first I place my stop loss, and then I always target 1:4 trades. Okay, and when I place my stop loss above that, into that, I came down all the way and analyzed that where my 4 ratio is, and that is the point right there, and that is where I closed my trade. I was not aiming for all the way here, like 1:16 or 1:10 trades. I just go with 1:4 trades. You're welcome, guys. Okay, what is the best strategy for beginners, Ravi Sharma? Um, um, uh, what exactly should I answer to that? It's more like uh, I have met different types of people. Like some are trading based on literally support and resistance. Some are trading based on MACD, RSI, simple RSI divergence. But the people who are really kind of successful and are consistently profitable are the ones who have a proper trading plan. Like if you have a proper trading plan, like you know that where you should be entering, like if you have specific pairs, if you have specific confluences, then I think if you like in a nutshell, if you have a fixed trading plan, and if you have backtested that for few months, and if you think that you are confident with that, like I mean, if the backtesting results are good, and you think that you are confident with that strategy, if you are going to the live account, then I think that's the only thing that can make you profitable. Like there is no best strategy. Like if I just tell you a few things, you won't be able to um, get profitable consistently based on that unless and until you do the backtesting yourself, because backtesting allows you to get the confidence, because in trading the emotion is really an important thing. Your emotions really can fuck your trading up. Okay, so backtesting allows you to get the confidence, and once you have the confidence and when you execute the trades on your live account, you know that your backtesting result has proven good. So maybe if you get 3 consecutive losses, you still would know that my backtesting result has been good. So maybe the fourth trade would be in profits, and I would still close my account with 1% gain if you are trading 1:4 trades. Please on goal. Okay, I will go over there. You're welcome. Has I have a question? Placing limits on 104 is a good idea. Reza, for me, I really don't consider that as a good thing. I will again go to the same point that if you think you have backtested that and the results are good, if you have you have a strategy like just placing the buy limits or sell limits on 4 hour or 1 hour, if you go over the past data using the replay toolbar option on TradingView or StopForex on MT4, and if you think that the results are good, then you can definitely go with that. I do not have backtested that, but over the experience, it's something that I don't think it's good, because as you can see, as explained on this, like on 2 hour time frame, for me the order block was this. So if I have placed my sell limit right there and placing my stop loss above this order block, there would be a huge zone. So for targeting 1:4, you will have to aim like way too down right there. So what you can do is like you can have a trading plan. Like I would be entering 4 hour block or 1 hour block, but I would be waiting for 15-minute or 5-minute confirmation, which is the old school pattern, which is stop on break of structure and return to our block. That is something you can follow. Okay. The method which school you follow, like market maker, ICT, I'm new, so I don't know. I actually studied, learned from um, Golden Lips Bullish on YouTube. So he has a playlist where he combines Wyckoff and SMC, SMC ICT, whichever you can say. Like he has like 12 videos in his playlist, and I just learned from that. Over the time, I learned from different mentors as well, SMC mentors, and I learned from my friends as well. Like you may know about that Eddie or Valiant Effects. I've learned from them as well. Like they were a good friends of me. I learned from them. I learned from different mentors. But the main thing, the main person which I tell you is like the Golden Lift Bullish on YouTube. He has a free playlist. You can just go over there and you can search his. Sometimes when reach is higher than from order acts too aggressively. Yeah, it depends. Like if the momentum is really strong, when we are trading order blocks, we just want the price to correctively tap in the order block. For example, if this is an order block right there, so you want the price to you know tap correctively, okay, not like that, like huge momentum, okay. For example, not like this, okay, but you can you know if price is typing in order block right there corrective ways, then I think that's a good thing. Which I find better for intra-position entry and exit? It depends on you which type of trader you are. If you're an intraday trader, you can look out for 1 minute, 5 minutes, 15, 30. I mean, I'm an intraday plus swing trader sometimes. So my swing trades are based on like 30 minutes, 15 minutes, and even 1 hour sometimes. Like I am really flexible with the market. It's not some exact time frame. Okay, so for intraday traders, it could be like 1 minute, 5 minutes, and that's it actually. Um, Thank you, Jonas. Can you break down JB Benzity you shared? Okay, I will do that. I learned from you said that we use breaker blocks and price subsequent close upward if it doesn't come back to it. Yeah, I did several exercises on these, like when we have an auto block, imbalance, Quasimodo level, breaker block, and you're confused like which zone you should be entering. I did several exercises on the Facebook group, in the channel as well. I might do that further as well. If you think you learn from that, then I might do that as well in the future. Can you please link his YouTube here? Okay, just a second. Let me just do that. Okay, I've dropped that Solomon King. I've dropped that. Ivana Wyckoff for SMC. I trade both of them. Okay, guys. I've sent a link. Please, innocent sir, can you please talk about how you made your entry again of 5 minute Wyckoff? Um, it was basically like that. Okay. Okay, something is wrong. Okay, right there. So as I said, like Wyckoff could be like that, straight, something like that, something like that. It depends. So right there, I was seeing the Wyckoff distribution in this way, okay, and it's something like, again, it's something like I do not have any rules to tell you guys, but it's something that when you keep studying and keep spending time on the charts, then that is something which will allow you to, get this uh, idea in your mind. And from SMC perspective, that is simply a breakup structure. Stop under this order block is good because it stopped under the previous highs. It mitigated this order block. It broke structure. It left an imbalance. We have an inducement above that, price went up, took out the high, and again closed below that. So from SNC perspective, that is that way. But according to Wyckoff, it's just simply that price broke above that, came back within the range. I consider that as a UTED, and I just went with the flow. Yes, I'm recording this session. Wait, I will send you. Yeah, Reza, I will actually send in the channel the exercises which I did regarding that, order block, breaker block, imbalance, like where price should be, like the reasons for that. I would do that. I would send in the channels. Yeah, Reza, go ahead. Solomon, thanks. You're welcome, bro. You're welcome, Enjoy the Trader. What's the proper amount to use per trade? Ibrahim, it's 1% or 0.5% on Profum's account, and it's something like 3%, 4% on personal account. When we see a 15-minute order block, for example, it's bearish, we should wait for 5 minutes and 1 minute to be bearish too, or if price on 5 minute time frame got bullish, 1 minute got bearish, can we insert? Um, um, Let me just repeat that. It's confusing. When we see 15-minute order block, for example, it's bearish, uh, we should wait for 5 minutes and 1 minute to be bearish too. If price on 5 minute time got bullish. Um, no, 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 no. I'm not able to. Okay, let me just go over that again. Okay, so you're saying like if you get confirmations for a bearish entry in 1 minute, but you are not getting confirmation in 5 minutes for a bearish entry, then can you enter? Yes, you can enter with proper risk management. If you have backtested that thing, then you can definitely enter. Like every question, like most of your question, just depends on the backtesting. Like I always say, backtesting is really important. If you backtest and if you think the results are good, then that is the only thing. Because if you ask me, I will give you some answer, but if you ask another trader, you would get another answer. So would you be convinced with those two answers? I don't think so you would. So the good answer for that is to backtest yourself, and you will get the answer for that. Ibrahim, proper estimate for it's just 1% per trade. I did some talks about the platforms. I would send the video in the channel as well. Maybe you can watch that if you're from Rebellion Trading. I'm from Pakistan, Naveed. ICT is enough. Should I Wulan Wyckoff too? ICT is enough actually. I've seen a lot of ICT traders to killing the market. I've seen them. I'm not a proper ICT braid. I just know few of his concepts, and I just use them as a confluence. Ravi Sharma, thank you for your welcome. Her analysis. Just a 5 minute trade. I know we trade of the 1 hour. Then I would have missed the trade. On 1 hour, you can definitely jump in the market. Okay, you wouldn't have missed the entry. Okay, Jack, you wouldn't have missed the entry, but where would you have placed your stop loss? Like this was my entry, okay, and price tapped that, okay, the entry would have executed, but where would you have placed your stop loss? Above this high? Where? It depends. Like for me, like this is a huge zone. I just wait for price to give tab within the zone and give me low time frame confirmation. I just enter. But if you're just trading based on 1 hour, then if you're considering this as a whole zone, then your stop loss would be really bigger. You're welcome, instructor trader. You're welcome, Naveed. I'll see, Solomon. I'll see about that. You're welcome, Jack. So let's just wind up the session. It's gonna be too long. So uh, thank you everyone for attending the session. I hope you learned a thing or two, and keep interacting with the other guys. Share what you have already learned, because at one stage you were at the same point the other trader was. Yes, I will be sending a recording. Don't worry about that. So yeah, thank you everyone for attending. Thank you. See you guys later.